Value of ETF assets in Canada are now worth more than $500 billion. Our next guest says 2024 was a year of phase shifts in the market with new dynamics in inflows. We're joined by Tiffany Zhang, Vice President of ETFs and Financial Products Research for National Bank Financial. Good morning, Tiffany. Thanks for being with us.
Good morning. Good to see you.
You as well. So tell us about 2024 record inflows. What was driving that?
Absolutely. So we had $76 billion going into Canadian ETFs in 2024. And what's amazing about 2024 is that the inflows really came from all corners of the markets and all major asset classes, including equity ETFs, fixed income ETFs, commodity ETFs, as well as multi-asset ETFs. So the only asset class that had outflow last year was crypto asset ETFs. And so we saw the broad-based inflows into Canadian ETFs. And another angle that we look at it is we look at the inflows into the Canadian ETF providers, right? So in 2024, about half of the Canadian ETF providers, which have 45 issuers in Canada, had a best year of inflow last year. And so that really tells us the inflow was driving from all corners of different asset classes. And so with the equity, that was about 60% of all of the ETF inflow last year, and the US took about 50% of all of the equity inflow. And so investors were so enamored with the US equity last year that now the largest ETF in Canada became a Vanguard S&P 500 index tracking ETF, VFV. And then fixed income was about 30% of all ETF inflows last year. We saw a broadening out from the cash deposit ETFs into fixed income products with more duration and credit profiles as policy rates declined in Canada and credit spread tightened. And then there was also institutional as well as retail interest in the gold bullion ETF that led to the record-breaking commodity ETF inflows.
Tiffany, a big question comes up with respect to ETFs, the fact that the money all crowds into the same names. And that is particularly being the part of the story in the U.S. where the S&P 500 is now dominated by the 10 top names, and all the ETF money, you mentioned that a lot of money went into ETFs from Canadian investors, U.S. ETFs. Is that causing a problem? Are we seeing too much concentration in effect in these too few names, all driven by this ETF investing as opposed to the more traditional pension funds or mutual funds buying this security versus that security? What do you think about that?
So I think ETF overall, in terms of trading volume compared to the underlying stocks, is still a pretty small portion of the overall market. So on certain days, if you look at just the volume, that is the ETF investors changing hands on the secondary market, their share could be as high as 20-30%. But if you look at what stocks are actually going into the ETF creation redemption, which is ultimately what determines the underlying price, is less than 5% for both Canada and the US. And you're absolutely right that investors really love the US equity last year in particular, driven by the stellar returns of the US stock market. At the same time, there's also investors doing a little bit of diversification using ETFs such as eco-weighted products, EQL from Invesco, that have about 20 basis point of weight into each of the underlying members instead of focusing on the top 7 or top 10 names. And there's also investors pouring money into small and mid-cap ETFs in order to alleviate that concentration risk. For example, last year we saw significant inflows into small-cap ETFs. Fidelity's FCGS that invest in a global basket of small-cap stocks also got significant inflow last year.
So, Tiffany, when ETFs started here in Toronto decades ago with the Toronto Index Participation Units, the idea was, and for several decades seemed to be, it was a passive investment. Now you're saying that half of all Canadian ETFs are actively traded. So is this one of the phase shifts you're talking about?
That's absolutely right. So when we look at the ETF data in Canada, about 50% of Canadian ETFs are now actively managed. In terms of assets, that's about 30%. And so you may say that, oh, maybe the AUM number is still small, but that's really because the active ETF adoption and new launches really accelerated in the past 3 or 5 years or so. And so many of the ETFs in the active space are quite new. And also there's a wide range of activeness within that actively managed ETF space. So when we talk about active, we are not only talking about the portfolio managers looking at stock and bond selection. There is about 50% of the active ETF in ETFs such as asset allocation ETF, right? So those allocate between different asset classes such as equities or bonds, but they don't really track index. And then there's also another segment within that 50% that's money market and cash ETF. Those ETF are, depositing cash at financial institutions or investing in money market securities. They have stable NAV and pretty high distribution yield corresponding to the Bank of Canada or the Fed overnight rate. And then there's also, within that 50% of active ETF AUM, option-based strategies. Our guest earlier mentioned about, providing income. So this is an area where the ETFs are trying to provide the high and stable tax-efficient income for investors. So all of these ETFs, we consider them active because they don't really track a published index, in our opinion.
Now, Tiffany, your numbers say that there are nearly 1,500 ETFs in Canada now with 45 issuers. Is there a saturation point at some point when so much is too much, so to speak? And also, are there certain niches that sometimes are too small and ETFs just have to shut down because there's no demand for them?
Yeah, so I get asked that question all the time because, there's always an increasing number of ETFs, as you mentioned, right? So now we have 1,500 ETFs, but it seems like the appetite for ETF really has grown. And especially, when we look at the live ETFs in the market today, about half of them, they are launched within the past 5 years. And typically, what we see is that investors, they would like to wait for at least 1 or 3 or 5 years before investing in the ETFs. And so some of the ETF, of course, are immediate home run, but a lot of times investors would like to take time. And so the fact that we have so many new ETFs means that there could still be a long runway for the markets,
right,
for the Canadian ETF industry.